how is the euro likely to react to today's FOMC? That's what we're talking about, and we'll also cover the DXY, which is still stuck in that range that it's been in now for weeks. So looking at the EURUSD daily time frame, we know about this area up here around 111.40, which was the December 2023 high. So we've talked about this a lot recently, how we had the sweep above this, liquidity had built above this area. We got the sweep above it and the failure to hold above 111.40 as new support. So that's why we saw here on this NFP candle, this right back here, this was the setup that I talked about at the time, where we saw the euro come up here and sweep this area. Okay, so sweep this high from right back here, right above 111.40, and then continue here toward our first target down there around 110. So that played out relatively well. However, we got a significant bounce from this area right there back to 111.40. Now, that's not too surprising considering the fact that this up here, this long upper wick, I talk about this a lot on this channel, but this long upper wick up here was an imbalance for the EURUSD, and we are seeing that filled so far this week. Now, speaking of imbalances, we have areas like this down here that is also now going to be an imbalance. Notice how this candle right here, we saw literally no retracement into this, okay, or virtually no retracement on the very next candle. So this down here, guys, is going to be an inefficiency or imbalance, which often acts as a magnet for markets, especially when you're looking at a range-bound market like this. Now, I'm not saying that the market will move down there. Okay, we don't know what's going to happen here, especially with FOMC coming up. But this down here is certainly going to be an imbalance for the euro, down around 110.50 or just below. So the key for today's events, guys, and I say this a lot, but I do not advise, trading ahead of things like FOMC or even during FOMC. We know that the spreads are going to widen. We know there's going to be volatility. We know there's going to be games being played by market makers because we also know that the market has spent some time here in this range, which means that there's liquidity below this low down here and above these recent highs. So you could very well see the euro move higher on the actual rate decision and then move lower during the press conference. And that often happens, okay, or vice versa. We see the market move lower on the rate decision and then higher on the press conference. So one of these two things is probably going to happen again today, knowing that the market has been range bound and also the fact that this is an incredibly significant rate decision for the Fed. Look, having been a trader for over 20 years, I know how difficult it can be to find a trustworthy broker. And that's why I'm excited to share with you the broker that I've trusted for 7 years now. I've even met them in person. So I would literally trust these guys with my life. And that is Blueberry Markets, where you can trade over 300 instruments in the Forex market, share CFDs, crypto CFDs, commodities, and also indices. Plus, they have 24/7 support, so no more waiting forever for replies. You can get help no matter where you live. And funding your account or withdrawing from your account is super easy and quick with options like MasterCard, Visa, bank transfers, and Skrill. But don't just take my word for it. They serve over 50,000 traders who can use platforms like MT4, MT5, and their web trader. And they have stellar reviews across sites like Trustpilot and Google. So click on the link at the top of this video or see the link in the description. And when you use my link, you are going to get a 30% deposit bonus. So if you deposit $10,000, they're going to give you $3,000 to trade with. With trusted support, hundreds of trading options, and unbeatable reviews, Blueberry Markets is the broker for you. So with that in mind, again, I do not like the idea of trading ahead of the event or during the event. So with the euro, it's range bound until proven otherwise, which means that we're just still stuck here between 110 and 111.40. Now, as for the DXY, you can see something very similar here. If we go over here toward the US dollar index, you can see that the market is still holding above this low from back here. So this has been a support level for the DXY for quite some time. You can see still holding above this mark, even with today's session. So like the euro, guys, it's a range-bound market until proven otherwise. We have 100.6 as range support. We've got resistance up here just below 102. So until we either get a close below this area or above 102.60, okay, that's key because I've talked about this before as well. It's not going to, take a close above 101.92. We need a close up here for the dollar to become constructive and move higher over the coming weeks. Alternatively, a sustained break below these lows would open up the 99.6 area, okay? So a range-bound market until proven otherwise, and that's important to understand when we're going into FOMC, because what you're going to find is that you'll see a lot of people talking down the dollar, talking up the euro. However, at the same time, when you look at these charts, we have to go with what's on the chart, not with what you think might happen or what you want to happen. You have to go with what's on the chart. And right now, again, it is a range-bound market, okay? It's sitting at resistance right now, and there is an imbalance down here. something very similar here on the DXY as well, where you can see this candle right back here, this red candle, there was no retrace into this. In fact, we got a gap down on the very next candle here, and there is still an open gap up here in this area. So this is an imbalance right now for the DXY up toward 101.5. Now, again, I'm not saying that the market will travel up here toward this area, but knowing this and knowing that the market is sitting at support right now, I would be very, very cautious about getting bearish on the dollar. In fact, I think it's ill-advised right now. Now, that could come back to bite me, of course, with FOMC, but we'll see what we get here from today's events. Now, like always, guys, I'm going to leave you with this. All right, when we look at the EURUSD, it is range bound. It is sitting below resistance, and a lot of people are going to be tempted to trade FOMC during the events. And my advice to you is to avoid doing that at all costs, because again, the spreads are going to widen. There are going to be games being played. And furthermore, knowing that liquidity has built up here above these highs, I think the most high probability of play here, if you're looking for a short within this range, would be for a sweep above these highs first. Okay, get the sweep above here, close back below within this range, then we get that move down here toward this imbalance. In my opinion, that is the high probability setup. Again, it doesn't mean that it will happen, but that is something to watch for, a sweep of these highs followed by a close back below this level. That would be a trigger right there for the short. And alternatively, if the euro is going to turn bullish after today's FOMC, what it's going to have to do is, when we look at the weekly chart, right, you got to see the market closing back up here within this area. Okay, so it has to close a day and preferably a week back up here toward these highs, clear this one back here, and establish itself above 111.40. So if it can do that, then the euro could turn bullish here over the coming days and weeks. But again, right now, guys, there is really nothing to get bullish about on this chart, because we did see the sweep above that December 2023 high. The market failed to hold above that, and it's also back within this channel. Okay, so I don't like the idea of shorting the market right now going into FOMC, but I do think a sweep of these highs up here followed by a close back below, again, that would be a trigger. It's incredibly important to wait for that. If we were to get that, something like this here, right, close back below, then that could open up this inefficiency down toward 110.50 or potentially lower. Subscribe to the channel and click the bell for notifications. Don't forget to join us at VIP. Click the link in the description for 90% off lifetime access. Or if you're on the website, click on that join VIP link. Trade well out there. Be careful with FOMC, and I will talk to you again tomorrow.